Hey folks, it's Simon here with your Tao Daily episode for Wednesday, the 4th of September 2024. Markets had a bit of a rough session on Tuesday, first day back from Labor Day, although it was mostly centered around tech. You can see here the NASDAQ, or the Qs, the ETF that tracks the NASDAQ, down 3% and taking out some support levels in the process. The price is now below all of the key short-term moving averages, and a lot of the damage that was done was caused by semis. All right, the chips got battered. You can see here SMH, the VanEck Semiconductor ETF, down 7.5%, and you know this is a pretty dramatic downdraft. And then a lot of that was caused by Nvidia, everybody's favorite stock, former favorite stock. Nvidia down 9.5%. And showing a gap and crap pattern. This is when we get a gap lower and the stock just craps throughout the day, closing again almost on its dead lows for the session. We may get a bounce in the next day or two, but I think we're back into sell the rally mode here, and that bounces are likely to be counter trend, and that the main thrust of the move will be lower, particularly in the chips. Now, what was the smoking gun? Was it the DOJ quizzing Nvidia over antitrust? Was it dollar yen with the Bank of Japan Ueda's comments about wanting to hike again? Look, it doesn't really matter, okay? Don't tie yourself up in knots asking why. The better thing to do is just to respond to price action, manage your risk, and trade the chart in front of you rather than people's opinions and narratives. Now, as rough as kind of the markets felt yesterday, and certainly the headlines were pretty bearish, if you're invested in healthcare, you didn't really feel anything yesterday. If you're invested in consumer staples, consumer staples were up on the day, new all-time high. If you're invested in utilities, again, you didn't really feel anything yesterday. So we're not in a wholesale kind of market meltdown. We're not in a bear market, not yet anyway. And these more defensive sectors of the market are a pretty good place to hang out during periods of volatility like this. We've got a data-heavy week this week. ISM manufacturing yesterday was a touch weaker than expected, 47.2, still in contraction. Obviously, the highlight this week will be the jobs report on Friday. And in a growth scare, defensive sectors like healthcare and utilities and consumer staples, like I said, they're a pretty good place to hide out. Now, if we do enter another round of forced selling, as we saw in late July, early August, there'll be nowhere to hide, and kind of that's when we see correlations converge towards one, and everything tends to fall. We're not there yet. It could develop, and for now, I'm short tech names, and I am long sort of healthcare and utilities type names. Well, that's what I got for you today, folks. I hope it helps, and I'll catch you tomorrow.